even if we manage to pull that off, and that's saying something. The real question is, who are we selling this to?
Same people we've been selling it to for the last 2 years, and whoever else will buy it.
But John, if you do this, you will kill the market for years. It's over. And you're selling something that you know has no value.
Welcome to Markets Around the World. I'm K2, and this is your weekend edition packed with key market updates and insights. Lower interest rates, easing inflation, and strong corporate profits could fuel the U.S. stock market rally through year-end. But all eyes are on this Wednesday's Consumer Price Index data, a potential game-changer for a December Fed rate cut. Will 2025 bring a recession, or will the economy hold strong? Stay tuned as we update you weekly with the latest trends and analysis. If you're passionate about the markets, don't forget to subscribe for deeper insights into the global financial landscape. Let's get started. Lower interest rates, easing inflation, and rising corporate profits are driving the U.S. stock market rally into year-end. However, all eyes are on Wednesday's Consumer Price Index data, which could influence expectations for a December Fed rate cut. Thomas Hainlin, senior investment strategist at U.S. Bank Asset Management, highlighted the supportive environment for risk assets like stocks and cryptocurrencies, given stable labor market and inflation data. The week ended on a high note, with the S&P 500 and NASDAQ hitting record-closing highs on Friday. An upcoming inflation report will test the resilience of the U.S. stock market's record-setting rally and provide crucial data, influencing the Federal Reserve's potential rate cuts. The S&P 500 is on track for its third consecutive weekly gain, with a year-to-date increase exceeding 27%. This positive momentum is bolstered by expectations of further Fed interest rate cuts amid a resilient economy. The recent murder of a health insurance executive in Manhattan has drawn attention to health insurance denial rates. Meanwhile, legislative inaction could soon make healthcare plans more expensive, potentially increasing the number of uninsured Americans amid rising premiums. At the heart of the issue is a tax subsidy that helps approximately 20 million people purchase coverage through the Affordable Care Act's exchange. This premium tax credit is set to become less generous after 2025, unless lawmakers intervene. Coalitions are forming to prevent this outcome, but some experts suggest that individuals should prepare for reduced assistance from the tax code. Donald Trump acknowledged his proposed tariffs on foreign trade partners might raise prices for U.S. consumers, stating, "I can't guarantee anything." In a wide-ranging NBC interview, he also discussed monetary policy, immigration, and U.S. involvement abroad, while suggesting some political rivals and officials pursuing cases against him should face legal consequences. Trump added, "Things do change." A U.S. federal appeals court upheld a law requiring ByteDance to sell TikTok's U.S. operations by January 2025 or face a ban. This decision heightens the chances of banning a platform used by 170 million Americans, citing national security concerns over data access by the Chinese government. TikTok plans to appeal, claiming the move violates users' First Amendment rights. The ruling is a win for the Justice Department but leaves TikTok's future uncertain as legal battles continue. Now let's dive into some key data points to better understand the impact of the market we begin with. China's central bank, the People's Bank of China, PBOC, increased its gold reserves to 72.96 million fine troy ounces in November, adding 160,000 ounces after a 6-month pause. Over the past 2 years, China's gold holdings have grown by 10 million ounces. The value of these reserves reached $193 billion in November, slightly below October's record $199 billion, due to a 5% decline in gold prices since their peak on October 31st. Despite this, gold prices have risen 28% year-to-date, trading just 5% below all-time highs. The PBOC's resumption of gold purchases underscores its commitment to diversifying reserves and mitigating currency depreciation risks, even amid high gold prices. Now let's take a look at the market performance and the key events on the calendar for December. If you need these visuals, feel free to pause the video and take a screenshot. Global manufacturing activity continues to contract. In November, 59.4% of countries saw their manufacturing PMI index shrink, meaning 21 out of 36 major economies are in a manufacturing recession. The Eurozone shows the most weakness, with PMI at 45.2 and 29 straight months of contraction, led by declines in Germany and France. In the US, manufacturing PMI has contracted in 25 of the last 26 months, marking the longest streak since the 2008 financial crisis. The manufacturing sector is under significant global pressure. The last time we saw such a sharp spike in USD appreciation was after Trump's election in 2016. However, that move reversed the following year, as his policies ultimately led to a weaker dollar. In November 2024, U.S. equity funds experienced record inflows of approximately $140 billion, the highest monthly amount since records began in 2000. This surge was driven by investor optimism following the presidential election, with expectations of tax cuts and deregulation under the incoming administration. The S&P 500 has advanced 27% year-to-date, positioning it for one of its best performances in recent history. However, some experts, including Warren Buffett, caution that current market valuations may be overstretched, suggesting potential risks for investors. This significant capital influx into U.S. stocks reflects heightened investor confidence, but also raises concerns about market sustainability. Let's review the S&P 500 heat map for the past week. Top performers: Amazon, increased by over 9%. Tesla, surged nearly 13%, leading the gains. Meta Platforms I, grew by 8%. Broadcom, rose by more than 10%. Microsoft Corporation, up 4.75%. NVIDIA, gained 3%. Eli Lilly and Company, increased by 4%. Underperformers: United Health Group, declined by 10% over the week. Sector performance: financials, XLF, real estate, XLRE, utilities, XLU, materials, XLB, and industrials, XLI, sectors underperformed during the same period. Here are the notable earnings reports for this week. Monday, December 9th, Oracle C3.ai, MongoDB Rent the Runway, Toll Brothers. Tuesday, December 10th, GameStop Academy, Sports and Outdoors Ollie's Bargain Outlet, Designer Brands Dave & Buster's Entertainment AutoZone Stitch Fix. Wednesday, December 11th, Adobe Macy's. Thursday, December 12th, Broadcom Costco Wholesale RH, formerly Restoration Hardware, The Lovesac Company, Sienna. Friday, December 13th, no major earnings reports scheduled. Despite the S&P 500 reaching new all-time highs, the Fear and Greed Index stands at 53, indicating a neutral sentiment among investors. This suggests that, despite record market levels, investors are maintaining a balanced outlook, neither overly optimistic nor pessimistic. Now let's take a look at the key events for upcoming week and wrap it up this video. Monday, Oracle earnings. Tuesday, GameStop earnings. Wednesday, CPI inflation data. Adobe, Macy's earnings. Thursday, PPI inflation data, jobless claims. Broadcom, Costco earnings. Friday, no major events or earnings. All right, folks, that's a wrap for this video. It's been a choppy week for the indexes, but we'll keep an eye on what's ahead. If you enjoyed the content, don't forget to like and subscribe. Got questions or thoughts? Drop them in the comments, and I'll get back to you. Thanks for watching, and I'll see you in the next one. Take care.